Hello, everyone. Welcome to Top Trading Edge. Today we'll be talking about last 22 years, seven biggest drops in the stock market. So let's get started. Uh, Before we start, please disclaimers. This video is for educational purpose only. I do not sell any financial advice or any recommendation to buy or sell any sort of securities or investment. For your financial action, please consult with your professional financial advisor before making any financial decision. All right, let's get started. So let's go back to year 2000, since this video says about 20 years, 21 years. So the first biggest drop was in year 2000 when Y2K.com bubble happened and the market dropped 48%. That started from the highest peak, August 2000, and then ended in July 29, 2002. So almost lasted for 2 years. And that drop was 48%. Dot-com bubble, Y2K, and so these are the biggest headline news. Let's get to the next one. Before we start the next one, this is weekly candles. Each candle represents the 1 week. Let's go to the next one. Next biggest drop. So these are not ascending order or descending. I'm just going by the year. So at least, but you come to know how many percentage it drops. So this was the first highest drop ever happened. And that one was in US entered into the recession. Biggest financial fraud happened that time. As you can see, you would remember that Lehman Brothers and all they went bankrupt. And that time also Fannie Mae, Freddie Mac, they also went housing bubble crash, and then auto industry, GM and Ford and everybody was in probably in a bankruptcy wedge, and then they had to get the TARP money from the government, and that's how it was saved. So that time market crashed 55%, and that lasted for 2 years. October 12th, it started 2007 and ended in 2009. So that was almost 3 years. 3 years, 2.5 years. Uh, it dropped 55%. That was a crazy drop, and that was the biggest. US announced we are in a recession, so that was the biggest drop. Then we'll go a little further, and I can see this is a small one. I would say jerky worky one, where you can see just a little. They call it a flash crash. Nobody knew what happened, but there was a sell order, big sell order started, and then it created the domino effect because it was a big sell order, and then it continued like that, and then the market found the support, but it was 14% down in April 10th. May 10th, it lasted almost a month, 2010. And then in 2000, you're gonna go back to here, European, 2011, when the Europe debt crisis happened, that time market crashed 18%. 18% down July 11th to August 11th, 18% down, as you can see. Then the markets, so we are looking at the SPY S&P 500 because S&P 500 is the biggest strength of the market. Those are the top 500 companies listed into the S&P 500. So we are currently talking about SPY. After that, 2011, let's go to further. What happened further? Now, after that, biggest drop was Brexit. As you can see, Brexit time in 2018, 20% market was dropped. October 3rd to December 24th, it lasted in 1 month, Brexit time, and market crashed 20%. So this at least gives you some idea of what is happening now, and you can compare with the past, what happened in past. So based on that, you can see that time market crashed 20%, and it lasted, as you can see, 3rd October to December, almost 3 months. Now, this one was the pandemic time. So when the pandemic happened, pandemic hits the world 2020, the market crashed 35% down. On February 20th, it started to the peak and then ended at 23rd March. Let me make the chart daily for current scenario. So as you can see, this is the one candle represents each day of the work. So this time market crashed 35%. So let's talk here. 2020 February, 35%. Since then, you know what? Let me make a weekly. No, let's finish this first. Then we talk about it. Now, in 2022, market hit the top 480 and then started solid. And as you can see here, 2022 highest inflation rate hits the 7% since 39 years. So in 1982, the inflation rate was almost like 13-14%, that time highest. And then 1983, it was below, it brought back to the 5%, 6%. So in 81 and 82 was the highest inflation rate. But I don't, the trading view doesn't provide me the old data of the market. So I would not have that information. I mean, would not have the chart, but we do have the inflation rate. It was 7%. And that what happening here is 2020, 39 years, market was ballooned with the zero interest rate since many years. As you can see, um, 2007 when the market housing bubble started, the interest rate started going down 4%, then slowly continue going down until 2022, and now when the pandemic hit, they made the interest rate at 0%, right? So market was ballooned with the zero interest rate. Now the rate reversal, market drop in progress 88.8%. So people were looking for support here, even including me. I was looking for support here. Probably that could be the support. Normally market always goes and hits the 100-day moving average or sloping support and bounce. Normally those are the scenario happens. So I thought it's been 2 years now. So what I see here is, if you look at it now based on the history, we need to learn out of this. Look, what's the biggest gain in last 2 years? Market gain so far. Market has gained 125%. 125% market gain since from the pandemic, right? So let me cancel that. And now we just down only 8%, 8.8% from the pandemic. Still, many cities, many countries are under lockdown and market took off. So what we need to learn out of this, that that I see the inflation is 7% is too high. Need to bring that down. That's the reason market wants to control the balloon, in which they need to bring the interest rate down. To bring the interest rate down, market is already still interest rate is not down, is heading to down. So in that case is every time I also noticed before also that whenever the market increase the rates, market keep crashing 5%, 6%, then again reversal and then keep crashing. So higher low, higher high, higher low. That can happen. These are the scenario I can see right now. Again, you can see right here, we are just here. This is weekly candles. And look at the balloon from 2020 to 22. And we're still struggling supply chain issues, a lot of issues in the market. So well, just this is just a small understanding that we should have the edge of the market. We can't just simply look at somebody's videos and say, hey, this is the support and let's buy from here. I would always look at the data, because these are the real data, real money in real market crash. So we always follow what exactly happened in that scenario. Say for example, Brexit. When Brexit happened, why how much market crashed? 20%. Pandemic happened, 35%. Right. So all these scenario we always need to keep in mind, and as you can see what happens. So last 2 years, let's talk about this. As you can see, 2022 market crash 8.8%. Pandemic time market crash 33. 35%, which was in 2020. So it's been 2 years. Then Brexit happened in 2018, 2 years. That time market crashed 20%. So what do you think? Market um, market is heading up from here, or is grinding down, or sideways, or heading down? That's what we need to check from here. These are weekly candles. So because 125% is a lot when we everybody was locked down and the market was grinding. So market always fools people, and that's how they make the money. They always wants to go odd versus even, and if they go against, then only they can win. So when everybody's bullish from here, then they become bearish from here. So that's how all the tech stocks are going down. But people think this is just a momentum, and they find the support and then go back. But I feel like I see a little caution sign here. So be careful. This is my top trading edge, which I like to always provide. If you guys like this video, please share, subscribe, any comments you can post on under comments, and I'll definitely respond you back. And also, you can follow me on Twitter at Top Trading Edge. I would highly appreciate if you guys share this video with your friends and uh, friend groups, families, anybody who into the markets or who wants to know about the market. I'm not the best content creators of the uh, on YouTube, but I'm trying my best. I just started making video on YouTube, and so people come to know, people learn out of these, and they take my experience and find the right niche to enter into the market or exit in the market, and that helps you. All right, thank you very much, guys. Uh, Tuning in for, and until then, next time, thank you.